Welcome back. We're at Beaver Creek, and I'm with Tim Smith, the CEO of US GoldMining. Tim, good to see you.
Thank you, Peter, for having me.
So, just kick things off. Really brief company overview. Obviously, you're a pretty new company. You're a spin out. Tell us a little bit about it.
Yeah, so we just spun out of a parent company, GoldMining Inc. Our name is US GoldMining Inc. We just listed on the Nasdaq back in April of 2023. We raised $20 million, and the use of proceeds there is to basically reboot the Whistler project, which is a large gold-rich copper porphyry deposit in Alaska.
Good. And just run us through, obviously, new company IPO'd. Just run us through your capital structure as it stands at the moment.
Yeah, sure. So we put about 2 million shares out there at $10 per share, or $10 per unit, which would include one full share and one warrant, which is exercisable at $13 for 3 years. And our parent company, GoldMining, maintains about an 80% shareholding.
Good. Okay. Whistler. Why the need for a spin out? Was it that you just weren't seeing appreciation of the value for within the parent company?
Well, I think we wanted to focus on the project to really move it forward in a really efficient manner. So, you know, as a big chunk of the gold mining portfolio, which at the time was about 32 million ounces, 16 million ounces in inferred, 16 million ounces gold equivalent in indicated, we wanted to take that and put it into a vehicle that we could provide focused funding and a very focused management and board to find the levers to really unlock the value in that deposit for the new shareholders, and also obviously to the benefit of the existing shareholders of gold mining.
Good. Talk me through you just mentioned part of it there, but talk me through the deposit as it is at the moment. So what sort of depths are we looking at? What's the grade? What sort of size?
Sure.
Everything.
Yeah. Okay. So it's a copper gold porphyry, but it's a gold rich variant. Okay. So by value, about 70% of the value is in gold. The remainder is largely copper. There's a little bit of a silver credit there as well. It sits in Alaska. It's about 100 miles from Anchorage. It's a at surface deposit. Okay. So we're looking at it as essentially, in the first phases initially, as an open pittable potential deposit. To break down the resource for you, there's about 3 million, or just a little bit under 3 million, 2.99 gold equivalent ounces in the indicated category, and another almost 6.5 million ounces in the inferred category. And I should stress that's gold equivalent, so obviously combining gold, copper, silver, across 3 separate deposits. So we talk about the Whistler project. That includes the Whistler deposit, which is obviously the namesake, about 2/3 of the overall resource inventory in the Whistler deposit alone. And then there's 2 separate satellite deposits, Raintree, which is just 1 kilometer from Whistler, and then Island Mountain, which is about 20 kilometers further south.
Okay. And have you done any pit constrained views on this yet in terms of how this could look like in terms of mine plan and things like that?
Well, we haven't quite got to mine plan yet, but certainly a mineral resource estimate is constrained within pit shells. Okay. So there's 3 pit elements to the resource inventory for Whistler, Raintree, and Island Mountain. And there's a very small, I would call it a proof of concept underground resource at essentially double the cutoff grade. So we use a $10 per ton cutoff grade for the open pit resources, and a $25 per ton cutoff grade for the underground resources.
And what's the sort of grades looking like at surface and as you get deeper as well?
Yeah, so at the open pit levels, we use a $10 per ton, which is equivalent to about a 0.3 gram per ton gold equivalent. Okay. So our average grades are about 0.5 gram gold and about 0.15% copper. And when you combine that in gold equivalent, you get about a 0.8 gold equivalent grade in the indicated and about a 0.6 in the inferred. But I'd also stress that, you know, if we look at that, and this is in our resource grade sensitivity tables in our technical reports, our 43101 and SK 1300, when we look at different higher cutoffs, and we've run those numbers obviously to see how the grade tonnage changes. Yep. If I just double that, and I'll throw some numbers at you, essentially over a $20 per ton cutoff grade, that cutoff grade goes up to 6.6 grams per ton gold equivalent. And we see about 2 million ounces in the indicated and another 4 million ounces in the inferred gold equivalent. So, and that is actually a nice concentric core of high grade. Just the way these porphyry systems work, they tend to have a hotter center with more intensive veining, and then shells of moderate and lower grade around it. So when we just look at those high grade cores that we see in Whistler, Raintree, and Island Mountain, they hold together very contiguously, and they all come right to surface.
What's the way that you're thinking about this at the moment? Because obviously you're doing a lot of drilling over the next year or two. but it's quite a sizable deposit as it is. Sounds like you found the higher grade core.
Yeah.
I mean, it sounds like there could be an option potentially for starter pit at the high grade core.
Yes.
How are you looking at this in terms of allocating resources, and what's the plan? What do you want to achieve over the next couple of years?
Well, it all starts with the geology, because a good resource and a good mine plan always comes back to having a good, solid geologic model. So the work that was done 10 years ago was sound work. We're very happy with it, but there's been a number of developments in technology in the way that we can image, especially the geophysics. So we've got a geologic team working on updating the geologic model, concentrating on Whistler now because it's the biggest, but in time we'll work our way out to Raintree and Island Mountain as well. So initially our drilling right now is answering some geologic model questions, and it's probing the geometry, the extents of the overall productive porphyry system. And by productive porphyry I mean has the potential to host gold and copper mineralization. We're also looking for incremental extensions, and where we see those high-grade cores and perhaps a lack of drilling is not allowing us to interpolate those properly within the model, we're doing some drilling to answer those questions and really be able to understand the controls on the high grades and interpolate that better within the model. So that geologic understanding should relate to an improved resource confidence overall. We'll then take that, put that into some mining studies. We'll run some scenarios, do some trade-offs between a bulk tonnage lower grade versus higher grade starter pit, and everything in between. We'll look at the curves, we'll pick the value, and ultimately we'll put that into a preliminary economic assessment.
Okay, so mixture of infill and step out, mainly on Whistler at the moment, and then potentially some targeting on satellites.
Well, that's right. Yeah, thank you for mentioning that. There is a third element to the drilling, and that is that I'll throw a concept at you, the porphyry cluster concept. So we see a very deep in the magnetics, a very deep-seated batholithic causative pluton, which is shooting up these higher level apophyses that are hosting the gold copper mineralization. We've got 2 so far in our resource. We see multiple targets in our magnetics. Very exciting potential for, obviously the objective is a new discovery, a new porphyry on the books.
Good. I guess for you at the moment, because there still is optionality out there, right? But I guess the path forward is, given porphyry is such a large deposit, they're usually quite expensive to build in terms of CapEx. Was part of the thinking around the IPO that obviously it's then easier to then JV or partner with someone on the singular asset rather than obviously through the parent company, and obviously shine a bit more of a light and a bit more attention on this asset to sort of get it there? Or are you more thinking that you want to take this as far as you can and maybe look at the various options for starter pits, or maybe get there yourself? Yeah,
I think it's the latter. Nothing's off the table in the future, but there's no for sale sign out. We're not actively seeking partnership. Our $20 million, the use of proceeds will take us through to completion of the PEA in 2 years' time. At that point, we'll assess. And if it makes sense in terms of return of value to our shareholders to go it alone into feasibility, we will do that. If it makes sense to bring in a big brother, a strategic partner, for example, perhaps via equity or a joint venture. Obviously, all those options are on the table for consideration further down the track.
Obviously, being in Alaska, I guess most investors are looking at it, if they haven't looked at the project in depth, first thing that comes to mind is infrastructure and cost of being there. What can you tell us about that? How tough is it where you are?
Well, Alaska's vast, right? You can fit California, Montana, and Texas into the area of Alaska, and yet the infrastructure is very poor. So there are a lot of very remote projects. One of the key, I think, attributes for Whistler is that it's just 100 miles from Anchorage, which is obviously the main population center and a major transportation hub. Obviously has a future potential demographic for employees for future mine infrastructure and development. It has power, it has highway, it has rail, it has ports.
Good.
So one of the key developments recently under the current state government is a roads to resources concept. And they've undertaken a number of studies, one of which is the West Susitna Access Road. So Whistler sits in an emerging metallogenic district that we're calling the West Susitna Mining District, just 100 miles from Alaska across an alluvial plain. So a lot of people also think of mountains and glaciers, and yes, we're in the Alaska range, but the actual terrain at Whistler itself is quite shallow, gently sloping topography, almost plateau-like, and it's connected across an alluvial plain. You can fly there from an airstrip in Anchorage inside of 45 minutes to our strip. We're serviced in the summer via airstrip, in the winter via a winter road. in terms of partnering with the state on this roads to resources concept, a couple of key milestones recently, one of which is that the state has announced that the Department of Transport, they've put $85 million of funding into their state transport infrastructure plan, which will include the first 17 miles build of that road, tapping into federal funds, and a major bridge over the largest river, the Susitna River. So that's a huge platform to then branch off of to build the rest of the road out to the Whistler in the West Susitna Mining District. We're partnering with another state infrastructure bank, essentially the AIDA, the Alaska Infrastructure Development Exploration Authority. The concept there is a public-private partnership or potentially a toll road agreement, and there is precedent for that. The road into Red Dog Mine, which is up in the far northwest, owned by Teck, far northwest of Alaska, that was a toll road, and that has returned on the capital investment. So essentially for us, this is a huge advantage in terms of the design, the stakeholder consultation, and the permitting of that road access, and ultimately potentially a sharing of the capital to build that access that will link Whistler with a ready-made port facility, a port called Port Mackenzie, which is just on the harbour opposite Anchorage Port. So we can eventually, with the potential mine development, truck our concentrate 100 miles directly down to port for shipment.
Good. Okay. And just to finalise things, obviously you've touched on obviously a lot of the focus on drilling at the moment, but talk us through the next 6 months, 12 months. What are we expecting to come out?
Yeah, so we're drilling right now. We just announced a couple of weeks back that we'd commenced drilling. So we got right to work as soon as the financing was closed. We got teams in the field. We built out our camp. We had a pre-existing camp that needed a bit of a tidy up. We needed to get it to code. We did that. We brought the drill in. We've started drilling. We're going to keep drilling for another couple of months now. We expect to get a couple of thousand meters through to the sort of the middle of the fall. At some point, we will take a pause. We'll take that data. We'll work on updating the geologic model through the winter. We'll come back and drill off the balance of ultimately a 10,000 meter program at the start of next summer. Good. All the equipment's on site. We'll be ready to go and just turn the key next May. So ultimately, complete that 10,000 meters of drilling, about 50% on building out and de-risking the existing resources, the other 50% on exploration for new discovery. We'll take all of that data. We'll put it into some mine scoping studies. And ultimately, the plan is to start on the PEA, Preliminary Economic Assessment, in the second half of 2024.
Perfect. Tim, thank you for your time.
Thank you, Peter. Pleasure to be here.